Okay, ahead of a potential government shutdown, looks like it's going to happen. And again, sometimes these things rattle markets, other times they don't. The market is very, very overbought ahead of this. So again, it very well could be a catalyst, an excuse for a sell-off back towards the 200 period moving average on the S&P and the NASDAQ. The Dow was up 81 points ahead of a potential government shutdown for October 1st at midnight. S&P, it was up 27 points, up 0.41%. NASDAQ up 0.31%. The Russell was flat. The VIX was up 0.74%, holding above 16. Now, sometimes government shutdowns impact the stock market. Other times they don't. CNBC wrote this yesterday. Government shutdowns usually have little economic impact. This time could be different. That's correct, because the federal employee is getting furloughed. The concern is the government shutdown has longer lasting effects if federal jobs are lost on a permanent basis. If the president just ends up firing people, shrink the size of the government, which is what CNBC is reporting, could be further concerns about the labor market, which is already showing deterioration. We've already had a negative number for June. Wall Street could get, the jitters about this, do some nail biting on concerns about an already fragile labor market. We're looking forward to seeing what the jobs report is, whether they end up closing the government down or not. That will be an interesting report, having given the last report was so weak. And prior to that, we had those sharp revisions lower and further revisions the last time around. So again, this time be different. Yeah, it could be different on concerns surrounding the already fragile labor market. We'll see what happens. Sometimes these things impact the stock market, other times they don't. In more recent history, they haven't, but we've seen it rattle markets before. We'll see what happens. And do we even get a government shutdown? Do they hammer out a deal, a last-minute deal, or do we go ahead and get it? If we do get it, how long does it last? Watch a 10-year Treasury note yield. Does it break out of the bullish falling wedge? Do we get back above the 50-period moving average here, the green line there, and break the downward trend line? If I bring it up closer, you can see we got a bullish hammer, that could give us a higher low and a breakout of the bullish falling wedge. I think the government is likely to shut down. We'll be watching what happens with the 10-year yield if it does. Now, the NASDAQ is right below the previous high, and again, we slammed up into the upper boundary of the broadening formation. The trend line goes all the way back to the pandemic low, the 2020 low for the NASDAQ. If we go higher, you could form a divergence on the RSI in the daily time frame in the more recent price action right here. If we reverse, will this candlestick be confirmed? I'll be talking about the 9 counts that are forming this week on both the NASDAQ and the S&P shortly. So make sure you watch the video all the way through and watching these candles of indecision. I got a spinning top here, NASDAQ, and a doji on the S&P. But as we're trying to rally back up, we're just below that level. We turned off of this trend line on the NASDAQ. This is the trend line right here of the upper boundary of our broadening formation from these highs back over here. Every time we've hit this trend line, we've had a significant sell-off, nearly 16% over here, 26% as I've talked about. It's likely it's going to happen here. The question is, do we go up and hit the trend line again and form a divergence on the RSI and then sell off in the more recent price action right here from our recent high of last week? Or does this high hold and we sell off right here now and move towards the 200 period or maybe even beyond it and get a bigger sell-off than what we've already seen? We're at major resistance both on NASDAQ and the S&P with our highs from last week. We could hit the trend line again and then form this divergence right here on the RSI before going down. We get a lower high. We need, by the end of the week, to confirm that candlestick. We still may form the divergence here in the daily time frame, but then still by the end of the week, end up selling off with the jobs report, or if there is a government shutdown, don't get the jobs report, markets are rattled by a government shutdown, then we'll be watching to see if we confirmation to the spinning top candlestick in the weekly time frame. If I bring it up close here, you can see again, do we get a divergence right here on the RSI? and then turn, or do we just have an extreme like we had back over here? There was no divergence back here at the April bottom, and we just turn it down and start moving back down to try to take out the 50 period, try to take out the cloud here, or move towards it anyways, towards horizontal support, towards the 200 period moving average. We're slamming up into major resistance. The upper boundary of the broadening formation outlined in red right here on the NASDAQ 100 is the trend line from the 2020 low. Here we bounced off of it and then broke it. Now it's acting as resistance. It was acting as resistance in July of 2024. In December of 2024, we still went slightly higher in February of 2025, but ended up forming a divergence in the daily time frame and selling off nearly 26%, nearly 16% over here. I'm just rounding. Again, if we drop 16%, we're moving back. If with this move right here, then we're going to move back towards the 200 period moving average on the NASDAQ. I talked about that previously. But as we're slamming up into the trend line here, I pointed out last week that we were getting 8 counts. We had an 8 of a 9 in the weekly time frame, and that if we had the 8 or 9 bar, the high of the count, with our spinning top candlestick, the high, or a high for this week, that we would complete a 9 count as long as we don't close below the bar from 4 bars ago, which is probably unlikely. We're probably going to complete this week. So it's likely at resistance here that the 8 or the 9 bar is resistance. Now, whether we form a divergence in the most recent price action and the daily time frame on the RSI, go slightly higher and then turn, or if we get a lower high, can't make a new high, and then turn, we'll be watching. It was a 9 count that marked the bottom. It was 13.9. The very next week, we got the peak there in July of 2024. We got a 13 count going sideways, ended up forming a divergence, went a little bit higher a few weeks later, February, and that 13 count ended up giving us a sell-off. The 9 count was the bottom. Bar 8 was the bottom. Bar 8 could be the high here, or we can go a little higher. And bar 9 could be the high of the count as long as we don't close below the bar from 4 weeks ago, which would be 1, 2, 3, 4. As long as we don't close below the bar 5 of the count from 4 weeks ago, the count will form. If it completes, we have a 9-9 reversal signal. Over here, we did not get a pullback with the 9 count. We got an immediate trend extension. With the counts, they either give you, like over here, a pullback, a reversal, a bigger sell-off with the 16% decline or the 26% decline, a reversal, or a trend extension. One of those scenarios play out when you get the 9 count. Here we got the trend extension, and it formed a larger reversal pattern, a 9-9 reversal pattern, which is a reversal pattern, just as back over here, the 13.9 is a reversal pattern. Every time you hit the trend line, though, you get a significant sell-off. We'll be watching to see what happens here. Is the government shutdown avoided, or do we get it? The market shrugs it off, or is it part of the catalyst? We start seeing yields jump up, and again, the yields have a negative correlation with the market. If we start seeing the bullish falling wedge on the 10-year yield break out, we could see the market drop, as they do have more often than not a negative correlation. 100 is holding above the 10-period moving average. We're seeing the stochastic turn back up. The RSI is turned up. Is it going to form a divergence or confirm a lower high? The MACD has not yet rolled over on the NASDAQ. If we do go higher, you can see the histogram tick back up and then form a divergence on the RSI and then have it roll over once we get a divergence on the RSI. Right now, we've got a lower high, at least so far. We'll be watching. I did get some sell signals back over at the peak here. Trending signals failed to confirm those signals, and we bounced off the cloud here in the daily time frame and got back above the 10-period moving average. Signals still remain bullish. Just know if we go higher, we've got the upper boundary of the broadening formation, which is the trend line going back to the 2020 low. So again, directly overhead here. We likely either start a pullback with a lower high or form a divergence into that trend line and then turn. If there's major resistance on the NASDAQ here. Real fast, the daily chart I'm showing you on the broadening formation is the log scaling, which we go a little higher. The trend line we're slamming into right here is the weekly time frame. This is the linear scaling, and we're slamming right into that right now. So the log and linear scaling are slightly different. So just so you understand why it looks like we're hitting one right now and the other one we're not. We're still under it, turning off of it from last week. The daily chart that you saw was the log scaling, which makes a little bit better of a broadening formation in the daily time frame. So just wanted to explain that to you. If we go back up and hit the other trend line with the log scaling, you could overthrow further here. If I move the red line, you could see that we're just kind of right at it. If I straighten the line out, it moved a little bit on me. If I try to get it as close as I can, you can see we're just slamming right up into it right now, getting that 9 count. So a 9-9 signal. The S&P has the same pattern here. Let's take a look. Please support the channel with the link directly below that allows me to be able to provide you this information. If you follow the link below, it'll take you to a secured site. You can donate any amount you want or make it a recurring donation. If you do that, I thank you. I thank you for your consideration for that. We have the VIX with that bullish Harami pattern. It did not get confirmed today. Still could get confirmed by tomorrow, but it did not get confirmed today. We still have the VIX above the 50 period, the green line. It broke out. And then we have this other trend line from the high here and the high over here near that 200 period moving average. Saw the VIX break out of this trend line right here and get above the 50 period moving average. We saw the MACD move into positive territory, pull back beyond the trend line, beyond the 50 period moving average. Now it's back above it, but we got a black candlestick. Sometimes these things mark reversals. Other times they don't. We'll see what happens. Can we stay above the 50 period moving average? Does the MACD stay in positive territory? And if the MACD stays in positive territory, then I'd be looking for a close above the bar from 3 sessions ago. And again, that was the first bar of the bullish Harami pattern, which we got an inside day yesterday. And that is a reversal pattern, but it means nothing unless it gets confirmed, which means you got to come up here and you got to push above 17 in order to confirm that as a reversal pattern. So again, if we hold above the 50 level, you get above 17, you have the MACD stay in positive territory, then you can see volatility sharply increase. S&P tries to make a divergence and slam into resistance yet again. Then I'll be watching, do we stay above the 50? Do we stay above the trend line or drop back below it? Do we see the MACD stay in positive territory? So again, this is the warning sign that we had right before we had the February sell-off earlier in the year in February of 2025. And again, the MACD turned positive and you had this 21% drop on the S&P. Again, so far, we haven't seen a real surge in volatility, but we have gotten above the 50 period moving average and we did break this trend line right here. So again, and getting that MACD in positive territory. So I'll be watching the VIX closely as we get the government shutdown. Volatility is very low right now. Does it start sharply increasing? We start seeing the yields and the dollar rise if the government shuts down, and that rattle markets. We'll be watching. If we form the divergence on the NASDAQ and S&P, it buys a little more time. And we don't know, will the government shutdown happen? And if it does, will it rattle markets? Sometimes they do, sometimes they don't. Recent history, they haven't. But in the past, we've seen it happen before. Market is very, very overbought. So see what happens. Is that a catalyst, or later on do we get the jobs report and that ends up being a catalyst? So we'll be watching what happens surrounding the potential government shutdown. Does it happen? And if so, does it rattle markets or not? And how long does the shutdown last? The spinning top from last week. We'll see what kind of candlestick we get by this week. You can drop all the way down here. You can close all the way down here and still have the 9 count complete. Bar 8 so far is the high of the count. We'll see if bar 9 ends up being the high of the count. But again, this count could very well produce a reversal. Sometimes you get the 9 counts and you turn immediately. Other times you go a little bit higher like we did over here. This 9 count is forming as we're slamming right into the upper boundary of the broadening formation and the 2020 trend line from the pandemic low. Now, the S&P 500 weekly chart, again, we're right below that previous high right there. Does that high hold, or do we take it out and form a divergence in the daily time frame in the more recent price action over the last 2 weeks, or do we go up there and then reverse, or do we get a lower high and come back and try to take out this low right here? You've got really a doji or kind of a sloppy spinning top, kind of a candlestick here. The open to the close there gave us a smaller real body, probably closer to a doji than a spinning top because they're about 9 points apart there, whereas the NASDAQ got a better looking spinning top kind of candlestick. Regardless, a doji or spinning top are candles of indecision. They're either continuation or reversal bars. We'll be watching. The one over here was a continuation. Will this one end up being a reversal? Do we get back-to-back reversal bars? Sometimes that happens. We're going to be watching to see. Now, again, coin's already sold off, getting a series of lower highs and lower lows. Does the stock market play catch-up to Bitcoin? This is the weekly chart as we're slamming into major resistance on the S&P. S&P also hitting resistance. We have two resistance points. The first one here is the blue trend line right here. This is from the 2018, the first 2018 peak, and it's parallel. If we take the low here from the pandemic low to the 2022 low, connect those 2 points. We don't hit the 2023, we don't hit the 2025 low, but just those two lows, you draw a parallel boundary. We're slamming up into that blue trend line right now from the 2018 first peak in 2018. The trend line we have is the low from the 2023 low right here. And if you draw a trend line up here and slightly exclude this level and connect it to this peak, this low right here, that separates the two peaks just before we had the top there in February, that trend line, we're slamming up into it right here, right now. Now, as we're hitting that trend line, this trend line right here is acting as support. This trend line is resistance along with the blue trend line. I also have this red trend line which connects, slightly excludes the shadow here at the 2022 low and connects the 2020 low with the 2022 low, the 2023 low, and our low in April. I think that trend line will end up being where top forms. We're not there yet, but I've drawn that red trend line in. If we turn off the blue trend line, we can eventually go back up to the red trend line. If we go higher, we still might try to reach it. Right now, signals remain bullish. If we get a Fibonacci retracement, and I'll show you this in a moment, just why I have it here. If we get a Fibonacci retracement, you want to be watching the minimum retracement of 38.2. That's coming in just under 6,000. We may not reach that level if we try to find support at the horizontal support or at higher levels above the 200 period moving average, but important Fibonacci to be watching of the entire advance. Let's take a look at the trend line here of support that we're bouncing off of. But I wanted to show you these resistance trend lines, the one from the 2023 low, again with their linear scaling, and the one from the 2018 high, that first peak in the first quarter of 2018. I want to show you this on the daily chart so you can see this trend line, the black trend line right here. Here's our 2018 trend line here. Here's the 2023 trend line from the 2023 low. Again, our linear scaling. And the black trend line is from the May low. And we hit it here in June. We hit it again here at the very beginning of August. And we hit it here at the end, or right here in mid-August, and then at the end of August, we tried to push below it, and we closed right at it, got a bottoming tail, and we had the September run-up, and we just hit it last week, yet again, got a doji and bounced off of it. So again, in order to have a sell-off, you got to take out that trend line right there on the S&P 500. Overhead is resistance, and if we try to go higher again, we might try to slam into the 2023 trend line yet again and overthrow the 2018 trend line. We're getting a 9 count in the weekly time frame as well with the S&P. If it plays out, you've got to take out this trend line to get any kind of a sell-off on the S&P 500. Question is, do we get the divergences in the daily time frame, go up and go a little higher, divergence in the most recent price action, and then come back and break this trend line and get a bigger sell-off? Or do we do it immediately, setting up a lower high, and we see the spinning top on the S&P, or the spinning top on the NASDAQ and the doji on the S&P play out, and those mark a high from last week? An important trend line right here, some important trend lines of resistance on the S&P 500 linear scaling. This is a daily. Let me show you the weekly, going back to the weekly. Now, if I show you the weekly chart, let's go back to our linear scaling in the weekly time frame. And again, you can see we're getting a 9 count, just like the NASDAQ. We got the doji last week. Do we come back down? Break the trend line in the daily time frame, slightly different here in the weekly time frame, excluding some shadows there. But do we break this trend line and complete the 9 count, or get the 9 count, go up and hit the upper boundary of resistance here from the 2023 trend line yet again, ending up forming a divergence in the most recent price action on the RSI? We sell off with the potential government shutdown or some other catalyst that ends up breaking the trend line and starting a bigger corrective move. We had a 9 count at the bottom. The 8 bar was the low of the count. So far, the 8 bar is the high of the count. Still may get the 9 count being the high of the count, but it's likely you're going to see a turn. You're slamming into major resistance, and you're getting a 9-9 reversal pattern. But right now, my signals remain bullish. In order for that to be validated, we've got to complete the 9 count, and then we've got to see my signals turn bearish. My signals remain bullish. I'm watching the spinning top on the NASDAQ. I'm watching the doji here on the S&P 500 on these weekly charts. We also have a potential 13 count. If we complete the 9 count this week, I believe that that count will get canceled out for the 13. I have a 9, we'll have a 9-9 reversal pattern. So just some levels to be watching here. And again, even if we go higher, we form a divergence on the RSI, you could still see the 9 count begin to play out. We've got a 9 count here on the S&P. You got one on the NASDAQ. The Dow's got an 8 of a 9 count. The 7 bar is the high of the count so far. This is the Dow weekly chart. Russell weekly chart has an 8 of a 9. The 8 is not the high of the count. We're getting the 8 bar this week, so we'll be watching the Dow and the Russell that are possibly going to form 9 counts as well. We'll see what happens. In order for it to be a perfected signal, the 8 or 9 bar has to be the high of the count. Over here, the 8 bar was the low of the count, so it was a perfected signal as long as the 9 count remained closing below the bar from 4 bars ago. Here you've got to get a 9 count that remains above the bar from 4 bars ago. And you've got an 8 of a 9 on the Russell. You've got an 8 of a 9 on the Dow. You're getting 9 counts this week on the S&P and on the NASDAQ 100. NVIDIA already had a 9-9 reversal signal. It led to an 11.25% sell-off. We're going back and slamming up into major resistance again. In the weekly time frame, NVIDIA, like NASDAQ 100, has broadening formation already. Apple, though, Apple is getting the 9 count this week along with the NASDAQ and the S&P 500. The 13 count led to a peak back in December of 2024. Apple ended up diverging with the market. The market made new highs in February. Apple made a lower high. So again, something we're paying attention to. Getting the 9 counts on NASDAQ and S&P at major resistance. Rally before breaking the trend line of support that I'm showing you in the video there. The May low, I just showed it to you. If we try to bounce, again, you could still end up trying to get a divergence here. Again, my signals remain bullish. We're back above the 10. We bounced up the 20-period moving average here. S&P bounced right at that trend line of support that I showed you from the May low. And again, going higher, we still might get a divergence right here before all is said and done, slamming back up into the resistance. But again, you'll have multiple points of divergence, and one in the most recent price action. You could possibly see that divergence develop on the MACD as well. If we go higher, we might turn back up. We rally if they avoid a government shutdown or rally on something else, but then begin to turn. If we have a shutdown or maybe another catalyst still spiking a potential government shutdown, we'll be watching to see what the catalyst may be. If we form a divergence here on the RSI and on the RSI for the NASDAQ, or do we validate a lower high? We got a candle of indecision yesterday. Is it a continuation that gives us this divergence, or Is it a reversal? Well, so far it was not confirmed, and we're holding above that 10 period, and we exceeded the high of the doji from yesterday, overthrowing the 78.6 Fibonacci of this decline over here that I showed you in yesterday's video. But we still have this massive divergence on the MACD, and again, we might get one right here in the most recent price action if we do go make a new high and form that RSI divergence as well. Zoom out here, you can see the divergence looking very similar to the divergence we had back at the February high. Multiple point divergence. Again, did we get one here in the most recent price action? If we do, again, we're likely going to stall right at that trend line right there, which is near the resistance levels that I'm talking about. And if we do form the divergence, you'll likely see it on the RSI here and the MACD in the most recent price action, followed by a break of this trend line. Again, this is our trend line from the May low right here, which again, we've had 1, 2, 3, 4, 5, 6 touches to that trend line. Again, you're likely going to get a pretty big sell-off when you break it, forming this wedge, rising wedge pattern. So do we hit that trend line, the upper boundary again, and then come back and break this, or do we get a lower high and break it and confirm the spinning or the doji candlestick in the weekly time frame? Again, eventually you're likely headed back to the 100 period, the horizontal support level from our February peak, or the 200 period moving average. Again, as I've said, if you get just a sell-off like we had in July of 2024, then you're looking at least at a 10% sell-off. That's what we had on the S&P in 2024. Sell-off that followed was much bigger, 21% from the February high. So we'll be watching, do we make our way down to test the 200 period horizontal support, or the cloud here, lower into the cloud? Do we see the 9 counts in the weekly time frame play out? S&P and NASDAQ go make a new high with their 9 counts this week. That would be the bar 8 for the Dow and the Russell. If they make new highs, the Dow and the Russell with their 8 count bar, the 9 count bar does not have to be the high of the count. If we do go higher and slam up into the trend line, form these divergences, it might give us the 8 bars. It might give us the 8 bars being the highs of the count with the Russell, with the Dow, rather than the 9 counts next week, if those 9 counts end up completing and playing out. So as long as we don't close below the bar from 4 weeks ago each week. We had that divergence with the rising wedge on the S&P in the more recent price action from the September low, the rising wedge there. It broke down. Now we're going back up. We're going back up to test this high right here. We have not exceeded it, and I didn't draw that very straight. We've not yet exceeded it, but we very well could if we try to form the divergence on the daily chart, going and hitting resistance before we turn back down. We had this divergence right here. Do we get another one here in the more recent price action here on the RSI and the MACD that could allow the divergence to form on those daily charts, or do we validate a lower high and begin to turn down, start moving to take out the low here from last Thursday? 60-minute chart of the S&P 500. Now, near the top, we got reversal signals on the daily chart for NASDAQ and on S&P, but these signals have not been confirmed by my indicators in the daily time frame. My swing trend signals remain bullish. So what I'm watching is, do we go up, end up getting another sell signal, and end up forming a divergence on the RSI in the daily time frame, or do we validate a lower high, come down, take out last Thursday's low, and get a lower high and a lower low, and end up confirming the spinning top candlestick from last week, which would be this low right here, taking that low out on the NASDAQ. Today's bar on the NASDAQ could be canceling out that reversal signal if we try to get a divergence. But if we get a lower high, I need to see another sell signal show up if we're to validate that as a peak. And like I said, if we form a divergence on the RSI, the daily time frame, we might get back-to-back bearish signals slamming into resistance and slamming into the upper boundary of the broadening formation, once again with our log scaling, which I've talked about. Thing on the S&P, I got this sell signal, but all it's done is taken us back to the trend line of support from the May low, and we bounced, getting the doji. You got a lower high at the moment. If we get a higher high, you'll form that divergence. Again, a possible reversal signal right here could end up giving us a little miniature double top to form the divergence, slamming into the trend line from the summer highs. Now, again, I got this signal, but it has not been confirmed by any of my swing trend signals. Bounced off of the 20-period moving average. Signals still remain bullish with the bullish reversal of conditions here. And again, we try to form a divergence on the RSI. You might see the awesome oscillator do the same thing in the most recent price action here. Stochastic did turn back up. Might do the same thing there. In order to sell off, you got to get a bearish reversal of conditions. You got to take out the 10-period, take out the lower boundary of the cloud, take out the 20-period moving average, and start to sell off towards a 50 or 200-period moving average. So if we do end up forming a divergence on the RSI, you could see one here in the daily time frame, which make the 9-count bars in the weekly time frame the highs of the count for the S&P and the NASDAQ, and it would make the 8 bars possibly the highs of the count for the Dow and the Russell. They're in the weekly time frame. Same exact setup here on the NASDAQ daily chart. Again, bouncing there off of the 20, just above the 20-period moving average. You get the red bars. Again, you might get that divergence on the RSI, and if you do, you can get one here on the awesome oscillator. Right now, we're just below the peak right there. We'll be watching. What kind of candlestick do we get by the end of the week? Get a divergence, or do we confirm a lower high? Do we end up confirming last week's candles of indecision or not? Or do we get another reversal bar, back-to-back reversal bars or something at these levels of resistance I'm talking about?